stock market has just reached a new all-time high. And if you've been investing for a while, you're looking at your portfolio today and it's looking good. I'm gonna pop up some pictures on the side over here. Some of my portfolios, some of market data, different things of that nature, as I talk to you guys about investing right now at an all-time high or waiting for there to be a correction slash a crash. Let's get into it. Look, when I first started investing, I invested at the top. Around the time, and I'm using this as a benchmark, there's been multiple times when I started investing, but I had to sell, I got back in, sold, got back in, a whole bunch of nonsense, right? But this last time I got in, VOO, and I'm using that as a little benchmark. Overall, the market was up at the time, not just VOO, but VOO was like around 450, like reaching 450 for the first time, right? And I felt bad getting in at that price point because I was like, man, if this drops, I'm gonna be losing money, or I should have invested like 2 or 3 months ago when the price was like barely reaching 500. And I was feeling and overthinking too much about it. And that's when I just told myself, I was like, honestly, man, just shut up. I told myself that, just shut up, dollar cost average, and over time, you will see the return, man. In the short term, you might be down, but over a long period of time, you will see it grow and compound. So just shut up and invest consistently. And I really wanted to apply that, and I'm saying that dollar cost averaging is the best approach into the stock market. And right now that the price is high, you should be investing. I know that you're like, no, there's a correction coming for sure. I might just wait for that. And if that's your plan, stick to it and do what you got to do. But for me, dollar cost averaging into the stock market is the best approach. And none of this is financial advice. I'm just talking about what I personally do and what I personally believe in. And not only is dollar cost averaging good because it evens out your cost average over time and it just has you consistently in the market on the good days, on the bad days, but it also takes away the overthinking. It did for me, at least. And what I mean by that is I would always be researching, like, maybe this stock is better to pick, or this ETF is better to pick, or this one's better. And then I would switch back and forth to different funds, different ETFs, different stocks, and just overthink. Like, that's the problem with me, at least. Dollar cost averaging just helps me to not overthink, because I would always be looking for the best ETF to invest in. This is the best one. No, you should be investing in this one. If you're investing in that one, there might be this little thing, da da da. There's always so much to it. That dollar cost averaging, I was like, you know what? I like this ETF. The expense ratio is not too bad. I'm gonna call dollar cost average every single day, no matter where the price is, and see and stick to it and see where it gets to. And that's something, though. You do got to do your due diligence and be confident in what you're investing in. If you're newer, do some research, But overall, not financial advice again, but the S&P 500, any like company that you want to go for, whether it's SPY, VOO, FXAIX, what else is there? Like, I know Schwab probably has one, right? Like, there's a whole bunch. Whichever one you like, stick to it, dollar cost average into it, and you will see the return over time, man. In the short term, and the short term could be 5 years, man. In the short term, you might be taking a hit, but in the long term, you will see it grow and compound. And the main focus that you should be focusing on is not where the price is at, or if you should have got in at this price point or this price point, or if maybe you should have picked this stock or this stock. Your main concern should be increasing your monthly income so that you're able to contribute more into these ETFs and the market in general. Retirement accounts, brokerage accounts, a savings account, also very important. That should be your main concern. Your main concern should not be, oh, I could have bought this yesterday for $1 cheaper. Oh, 2 weeks ago, I could have bought this for $10 cheaper. That should not be your concern, man. Your concern should be to increase your monthly income. Focus on setting a budget that you can invest. It doesn't have to be every single day. It could also be weekly, monthly, whatever schedule you like the best. I personally just do every day just because, I don't know, I like thinking that I'm going in every single day, right? And I do $5 a day into VO right now, but I also do a bunch into other different things, right? $5 a day, what is that? $25 a week. So you can do $25 a week, or you can do 100 a month. It really depends on the schedule you like, and it's all the same. I just do it every day personally. It's what I like. But you should focus on increasing that number. So one day I will get to $10 a day, 15, 20, 30, and just keep it growing. And that's the main focus. Because if I start focusing on, oh, I could probably be saving a couple cents here, or I could have bought this for $1 cheaper. That's the wrong idea, man. I gotta be focusing on, okay, if I do this, I'll be able to increase my daily contributions from $5 to $6. I'll be able to increase it from $5 to $10. And that ultimately will have a higher return. Of course, if you get and by that I mean one, you will increase your income, so then you'll have more capital to go into a business, the market, whatever it may be. But look, right now it's at an all-time high, and a lot of people will say, oh man, just wait, there's a crash coming for sure, and then the price will double. Or it will crash and people are like, man, you see, you should have waited, you shouldn't have got in at such a high point. But even a few months ago, not even a few months ago, but when I got in at that 550 price point, the stock dropped, and you guys saw it drop because of the tariffs. Crashes and corrections come. They will always be there. They will always be there. Whether it's something small, big, doesn't matter. I'm still going into the market. But you guys saw it crash from 550. It dropped back to like a little, like under 500 actually, with all the tariffs Trump was announcing and all that, and everybody was scared, and all these people were worried about all these different things. And that's where the overthinking comes in too, because a lot of people saw that price drop below 500 and sold their position. And some of those people had bought in at a $530, let's say, right? And it crashed. But right now, if they would have held and kept contributing, they would be up right now, because it has gone past 530 again. You get what I'm saying? And that's where the overthinking comes in. Even me, I was like, dang, man, this all dropped. But in the way, you got to think about it like this. When it drops down like that, they're buying opportunities, and you're getting a discount on what you're buying. Because if you would have been dollar cost averaging, and then your average was at like 530, and then it dropped below 500 pretty much, and then you drop down that cost average to like 510, let's say, and then when the price went up like now to 550 or like 560 now, actually, you'd be up right now. That's why dollar cost averaging is such a beautiful thing, and it has really helped me with overthinking and being too emotional, and like maybe selling this, buying this, doing this, and like doing too much. And that's why I really like the dollar cost average approach, and I feel like it's one of the easier ways to be in the market, especially if you overthink, man, especially if that. And the thing about averaging in is that on the good days, I think about it like this, right? On your good days, like when you're feeling good, confident, healthy, whatever it may be, you're going to be putting in work. But on the days where you feel like shit, where you feel like not moving, where you just want to rot away in the couch, you got to also be putting in work, man. Because the work you put in at your best will progress you, right? But the work you put in when you're feeling like shit will pay dividends in the long term, man. Because you will be helping yourself feel better and getting back to that good point. And once you're at that good point, that work you put in down here is pretty much double, because when you're here, you're like, dang, I felt bad, but I still did that. And you're going to have that confidence, and you're going to feel like, you know what I mean, man? If you get what I'm saying, you get what I'm saying. But you got to be putting in work, no matter if it's good or bad, man. And I'm talking about the time or the feeling you have. But the all-time high for the market right now, which is pretty crazy and unexpected, I feel like, right, with everything going on. But to me, all those numbers don't really matter right now, because right now I'm really just building my foundation, building my positions. So the numbers will be what they will be. The only numbers I got to focus on is the number that I contribute every single day, and working on increasing that number. So don't focus too much, and don't let your emotions take over. All-time high, all-time low, I'm going to be in the market. Take care.